Welcome to the Flex Forward podcast, where grit meets growth. With your host, Nic Espanet, bringing you stories of resilience, reinvention, and the real climb to success.
All right. Hello, everyone. Welcome to the Flex Forward podcast. I'm Nic Espanet, and today we're joined by Brayden Hudson, who we become friends through a workout group here in Fort Worth. Brayden's also having, he's got a great business that he's part of, a Trellis Energy Partners, and we're going to learn. I'll let him go into a little more about what they're doing, but I feel very blessed to have him on the show today just to learn about what all he's got going on in life. So, Brayden, if you can give us a quick snapshot of what you have going in your business right now.
Yeah, sure. Appreciate you having me on, Nick. Look forward to chatting and working through this. So we can, dive in as deep as we want, but just real quick highlights. Trellis Energy Partners, we started, into 24, really started fundraising in 25, and our target is a growth platform for individual investors. And so we do that through non-operated oil and gas investing. So we can look at opportunities across all the U.S., different commodities, different operators, different companies, et cetera, stuff like that. And so it provides sort of a de-risk platform for retail investors, individuals. And so it's kind of new for us. We were successful in some other ventures. And so this is kind of built on top of that, with the new idea and a new market. So yeah, that's kind of the
awesome. So I imagine there's a lot of competition in the oil and gas industry and different investment platforms. So what sets you yourself apart or your company apart?
Yeah, so I should be clear. There's really two of us now at Trellis. Myself as our CFO, and then Jake Bailey, who's my partner, founded Trellis with me. He's CEO, and he's a little more of the out in front person, and I'm a little more of the blocking and tackling, keeping kind of the house in order, if you will. And so I think, we've been doing this particular investment strategy in non-operated oil and gas Jake has been doing it since 2017. I've worked at various companies where we've had kind of this approach, but it's sort of been kind of a non-core venture, something that you just kind of managed, but didn't exactly try to, optimize or exploit, if you will. And so I think part of the reason why we've been successful is one, just relationships. We've been around for a little bit of time. We spend a lot of time with people, trying to get to know people, trying to understand their business, what their needs are. We really become sort of a budget augmentation tool for people. Obviously, they're extracting value out of the situation, and hopefully we are too, right? And so it's a win-win for everybody. But so it's a lot of conversations, a lot of talk. People are making decisions in oil and gas. It's a multi-billion-dollar industry in the U.S. every year, and so we play in a very small market. But you'd still be surprised at how we can help individuals. And so I think it's the relationship side. We tend to be pretty easygoing. We're not super hard, sticklers on every fine point legally. Try to close quickly. Try to make decisions quickly. And so sometimes these decisions come up pretty fast and have to be turned around in less than a week. And so we try to be flexible enough to be able to handle that. And I think because of, our relationships there and just kind of smooth, timing and closing and opportunities that we look at, I think tends to allow us to, be successful.
Optimize. And probably having a two-person office, you guys can definitely make decisions quicker than a big behemoth that has to go through layers and different approvals, and so that's got to make you guys a lot more nimble. So I do want to clarify something. Maybe some of the listeners don't know what is non-operating oil and gas.
Sure, that's a great question, and sometimes I like to laden it back to real estate or some other industry. But effectively, what we're doing as a non-operator, we're taking fractional ownership, and so every individual well has obviously there's 100% ownership, and that can be divided among one person or one company, and it can be divided, up to however many companies you want. Probably pretty typical. It's probably somewhere in the 5 to 8 companies owned.
Okay.
Some own 20%, some own 50%, some own 10%. But there's always one company designated as an operator who actually goes out, performs the work, selects the location, makes the decisions. And so we don't do that. We do the non-operated side, to where we rely on them to do all of that, but we're still paying our share. If we take a 10% ownership in an individual project, we pay our 10% share of the bills, and we receive our percentage of revenue from that. And so one of the reasons why we kind of went to this again is, a lot of times I think there's an open market for this. But it just really allows us, to look all across the U.S. Like you said, there's 2 of us who are pretty lean and nimble. We've got engineers on contract that help us out and look at these opportunities. And we've got other people who can chime in and help us out too. So it's not like just the 2 of us, but, we can look across the U.S. and not have to set up field offices, employees. We're not dealing with that. The operators dealing with all that
your
stuff.
costs. Yeah. I assume it keeps your costs down quite a bit.
That's right. Yeah.
And so you with the operator, you guys are the non-operators. You all have a certain set of operators, the ones that are making the decisions that you like to deal with, or do you review multiple, or do you have a certain pool you like to go to on a regular basis?
Yeah. So we really don't. I liken it to, we don't necessarily drive towards certain companies or operators. It's probably in the reverse direction, to where we've got a few that maybe we've had some deals go bad or whatever. But
you
most
avoid
groups
those.
are pretty solid and know what they're doing. But we are, we do invest alongside big groups, which is helpful. You think of companies like EOG, ConocoPhillips, Oxy, Chevron, and this current
trillions of dollar companies. Yeah.
Yeah. These are guys who have spent a lot of time researching the science. They have excellent employees and big teams that know what they're doing. And so that makes, from our perspective, when you don't get to control the situation because you're not operated, having good quality operators and companies who know what they're doing may de-risk that so much more.
For sure.
For us. And so it's really helpful. So yeah, again, we're not necessarily driving towards a specific person or company or anything like that, but we do tend to try to find groups that really know what they're doing and have the resources behind them to play
and have a track record. Yeah. I'm sure you guys do due diligence, or have done due diligence on them. You're not somebody that just opened up last month. You're probably not going to put them as your operator, which there's probably not many of those, because I would imagine there's a pretty big buy-in or expense to become an operator in that area, to have all the science and stuff and know where to, it's not the old days of walking out with divining rods and like Beverly Hillbillies or something, trying to find oil. Awesome. Well, if someone's listening and wants to get better at, managing a business, managing people, some of the things you do you have any suggestions for them?
Yeah. I think some of the few things that, I've tried to implement over time is, one, especially from a people perspective, is let your people be who they are and do their job.
Sure.
Don't get in their way. Let them run out ahead of you. If they're smarter at something, let them be smarter at something. If they're better at something, let them be better at something. It doesn't matter. And I think, as someone who has had people, report to them in the past, I've tried to be not necessarily best friend to everyone per se, because I think that can create some issues if there are kind of some things that have to, some changes need to be made. But really trying to be alongside them, joining arms and kind of working together. And then, like I said, not micromanaging them in a way that just beats them down to where they're not excited about what they do.
Love that philosophy, because I think it's getting buy-in from the people you're working. The same thing with us being asset manager over apartments that, our staff is running the property. They are the professionals. We want to give them, use their ideas and let them have buy-in, and then walk along beside them, not telling them how to dot every I and cross every T and make sure that, because then they don't have buy-in. For me, they're not going to run through the wall for you and work harder for you. But if they have that buy-in and know they have your support, and I think being okay with them making a mistake. There's got to be some accountability, but you also, even with my kids, it's okay to fail. If you're trying something, now don't make a big expensive fail, but get out there and push a little bit. And if there is a mistake, let's learn from it. What could we have done different, and what are we going to do different the next time to prevent this or have a more favorable outcome?
Yep,
awesome.
I agree with that wholeheartedly.
And you hit on it earlier, relationships, and it's having relationship not at different levels too, up, down, and horizontal. I think relationships are very important.
Yeah, I think so too. It's just meaningful to have connections with people. I think, especially in a post-COVID world, and I can get on a diatribe about this, but I think social media has lessened some of the connections that we truly feel. I think it's helped and enhanced it in certain ways, but we have drawn back from probably more meaningful connections. We know a lot more things about people, and we know a lot more things, but we don't have
kind of a thin layer.
Mm-hmm. And so, again, I think getting back to the relationship and trying to truly connect with people. So I think that's good. And then I think the other thing I would mention too, and this has come up so many times, especially when you're trying to close deals, is, and I know it gets in the way of family or other things sometimes, but just the idea that every little task I can do ahead of time, or even, in a point where, we're supposed to have this call at 9 a.m. tomorrow. I could probably get up and do it at 8 a.m. and deal with it then, or I could do it now. And I think the more oftentimes that you could say, I'm going to address it now, because what's going to happen at 8 a.m. is something else is going to blow up, and then you don't get to it. And then that call at 9, you're not prepared. So it comes up a lot when we're closing deals where I know, especially when you got lawyers involved. Of course, they love to work late, so that helps sometimes. But, you got to work late sometimes and just knock out some of these things, because you don't know what's going to happen 6 hours, 24 hours, 36 hours from now that could prohibit you. So if you got the time today, go ahead and start knocking some of those things down. And I've seen that in so many ways of, when we're working with banks, trying to get debt for some of these projects, and just every little bit that you can kind of push forward just shaves off, a day at the end of the project that maybe you wouldn't have closed in time because they wouldn't have been ready, or you wouldn't have been ready.
Yeah, I love what you said, that getting something, if you have time to get it done today, get it done, because there may be a surprise at your 8 o'clock, 9 o'clock point tomorrow. So when you have time, take care of it. Good stuff. So sounds like things are going well for you and your business, and a lot of people in different areas start looking towards the future and think about how they can create passive income through other sources to either enhance their current income or replace it maybe at some point. Do you have any thoughts on that?
Yeah. So that's I'll give you a long story on that, Nick. Sorry. That's sort of why we got into what we're doing today. And so Jake and I met in 2021. He had already started the company that I joined him at in 2019. We were a private equity backed, similar, almost the exact same strategy, maybe a little bit more narrow scope than what we are doing today. But yeah, so we joined then, and over, really 4 to 5 years, built that company. We had a great private equity partner, a lot of great resources there. But it ended up turning that into, a growth 3.5x in just under 5 years. Sold those assets in 23 and 24, and Jake and I started looking at the world and thinking, what can we do? How can we have the most meaningful impact with what we're doing? Because as great as it was, we returned a lot of money to people I think personally, and especially the team, obviously it was meaningful. But then you look at some of the investors and, you're a drop on their balance sheet. And so we started thinking, and maybe we think a little too altruistically in this point, but we got introduced to this retail market by our neighbors who are wealth managers, and started talking to them about how they look at their portfolios for their clients and how they're making both, obviously income and growth decisions, retirement decisions, tax decisions, etc. And we start to say, well, we can connect those dots with what we do. Oil and gas is a very tax-friendly growth play. Almost all of our capital dollars are deducted in the year incurred. And so you see a lot of people coming into this space from an individual investor perspective, whether it's passive, and we have the ability to take some of our deductions against active income. And so both opportunities there. So you see a lot of people come into the space for that. And then we got to, thinking, if we can help someone who has a, $250,000 portfolio or a $500,000 or a $10 million portfolio, that feels a lot more meaningful than if we helped, someone who has a $10 billion portfolio.
You're opening it up to people who may not have that opportunity.
That's right. And so I think this is we provide a great platform for individuals who are looking to get into oil and gas, who want sort of tax efficient growth. As everybody knows, it's kind of boom or bust, but I think from the non-op side, the way that we approach risk management and the way that we approach, how we choose our investments really protects a lot of the downside. Now, we're not going to hit home runs where it's going to be a 5 to 10x, but we're going to be pretty solid in that, 2 to 3x type over. And, the goal is really 5 to 7 years. So you got individuals who are looking at income, really within the first couple of years, returning their capital. And then we actually will continue to exit, but then we'll be cycling through new funds to offset, any income.
Okay.
So you have additional investment opportunities, and we do it over, a portfolio versus necessarily go fundraising for this $5 million project. We'll buy 20 different projects that total to somewhere in the 40 to 50, $60 million range, and so an individual would have access to each of those deals because the fund itself is purchasing the assets in those projects.
Okay, very neat, very neat. So. Yeah. As we're wrapping up the interview, do you have any exciting plans or initiatives in the works for the next 6 to 12 months?
Well, right now, we're pretty heavy fundraising today. So the hopes will be, we're still buying assets as well. So we're starting to load the fund with current and future capital expenses. And so we'll be pretty heavy on that. So I think one of the initiatives we're trying to figure out is how to blend those together. How do you time the fundraising with capital out the door to make a little bit more efficient approach in the way, ultimately efficient and optimizing kind of, growth within the fund. So, and then really, it sounds so kitschy, but we've started to have some conversations a lot over how we can, use something similar to AI or some sort of automated processes. If it's going to be a lean team, how can we, eliminate tasks that take too much of our time and get better and be more lean and more efficient?
Focus on what you're good at, or what's your ROI on that 30 minutes or hour of doing something.
Right. Yeah. We would rather be out, meeting people, talking to people, dealing with things out in the real world versus sitting behind a computer. And so much of our job is a big math problem. So we sit behind a computer a lot, both underwriting new projects and of course accounting for existing projects. So like I said, it's sort of cliche at this point, but that's something that we're trying to figure out how we can stay as lean as possible and optimize some of those things. And then, this really is just kind of building this platform out from there. We will probably introduce a new fund at maybe Q2 of next year. and just continue to grow the platform, prove out the success of what we're doing. We are a new entrant in this particular market for fundraising, and so there's a lot of track record, distrust, or whatever you want to call it, that hopefully we can get over the next 2 to 3 years and prove that we kind of have an idea and a platform that I think
works.
Will work. And so I want to see that happen, and just get better at the marketing of that and who we are and what we're doing. And so I think there's a lot of things that, we stumbled over this first fund that I think we'll be much better at going forward, and much better understanding of what we're doing, who we're talking to, how we're talking to them, how we're relaying information, what information do we need to relay to those individuals, et cetera. So.
Awesome. Just had a thought, with the tax savings, do you guys have a kind of an increase in interest towards the end of the year? I know in the multifamily world, all of a sudden a lot of people are wanting to get that depreciation, and there's urgency to close in 2025, or so I would assume, since there's a lot of tax benefits to what you guys are doing, that people we wish they would pay attention year round, but they get a lot more focus November, December on being able to invest and get the depreciation.
Yep. Yeah, we're dealing with that for sure. I think Q4 provides a lot of opportunity. People are finally looking up. Some of that's just people who have looked up and said, "Oh, I've made more this year than I thought," or what have you, or they're finally kind of sitting down at year end doing tax planning. And so, yeah, we see a lot of influx of that. And I think, for better or worse, Jake and I probably didn't anticipate that kind of slowed, drip of fundraising up through the first part of the year. Because of some of those issues, but we're starting to see things open up now. People are starting to consider that a lot more, and then we have some incentive to invest sooner than later. But like I said, getting that marketing out and explaining that story of how that plays out, and then I think we'll be more effective with that going forward on future funds to help drive some of that capital sooner.
Yeah, and I think you definitely, each time you do something, you should be getting better. If not, you probably should do something different. But right. You're going to learn. You're going to smooth out some of the bumps on the second one, even better on the third. Just that's human nature that we're going to learn. And in maybe the environment or some laws change and what you're doing. So you're going to you got to adjust to some of those. So it sounds like you guys have something really good going. So, Brayden, as we wrap up our time today, I really want to thank you for sharing some tips and insights for our listeners. If people would like to connect with you and potentially learn more about what you're doing, what's the best way they can do that?
Yeah, so really 2 ways. You can email me. Email is bhudson, BHUDSON at Trellis EP, so TRELLISEP.com. Or if you want to give them, my phone number, I really don't.
You can. I mean, yeah, you can share it.
Yeah, so we can be reached 817-637-0208.
And we'll post that stuff. So, if anybody want to reach out to me, I can share it, get you connected too. So, Brayden, I really appreciate your time today. It's been I've learned quite a bit about non-operator oil and gas. So this is something. So I think it's a great opportunity if you need some income, but also some depreciation. That's similar to what we do in real estate. So this is just another avenue to get there. So connect with Brayden if you have any questions. And thank you all for tuning in today.
Yeah, thanks, Nick. Great chatting.
Thanks for listening to the Flex Forward podcast. If you've got grit, growth, and a great story, visit flexforwardpodcast.com/guest to apply and join us on the show.